Okay, welcome everybody to another class of the little old lady method of investing for the medium and long term. All right, we're gonna have lots of fun tonight. Hopefully, feeling a lot better from the last class. It was terrible. I was really out of it. Oh my god! But I managed to get through that class, and I did pretty okay. I know it was probably boring in some parts, and I was made a few errors here and there, but in the class curriculum. But that's why I'm doing these test classes, these beta classes, to work out all the bugs and also to put this thing together. Actually, so I'm doing it. I put this stuff together today so that you guys can learn how to do this, and I can learn also how to teach people and improve my classes by your feedback. So today's lesson, we're going to be talking about where to select your buy levels. Right? Once you've finished figuring that out, you're ready to trade. Now, this is the second last class. This is the second last class. This is not the last class, because you'll be learning simple buy levels in this class, and the next class will be a little bit more advanced. But then also we're also going to review what we've learned. Now, I might have to split that up if it's too long into a fifth class. I don't know. We'll see. This is just a beta test, and I'm going to work out all the bugs and figure out what I'm going to do. Now, we're going to go over the disclaimer once again. You know what? Just to let you know, if you buy any asset, cryptocurrencies especially, they are risky, right? If you do lose any money, it's not my fault. You have to make all the decisions yourself, where to buy, where to sell, and whatnot. So if you decide to buy or do this, it's only up to you to do this, and it's not my responsibility. So if you take any losses, also if you follow the rules, you won't take any. You won't over the long term, you won't take any losses, right? So or medium to long term, basically. So what we're going to learn today, right? We're going to learn when to buy, when not to buy, right? And we're going to learn a few trading terms, right? Also, we're going to know what is the Fibonacci retracement and how to use it, and that's basically the main tool you're going to use actually to figure out where your buy levels are. We're going to use moving averages to also help you with your buy levels. We're also going to use the market volume also to help you a little bit with your buy levels as well, or when to buy. And then we're going to also teach you a basic fundamental analysis. Basically, fundamental analysis, or FA, is looking at the asset not by price but by other attributes. Now, when to buy and when not to buy. Obviously, it's really simple. You're not buying up here. Please. Like I said before, if I find out you bought up here, I'm going to slap the black off of you. Okay? And if you're white, I'm going to slap the black on you. Really, you should be buying. A good time to buy is down here, and I'll help you with a little bit of the tools that we're going to learn today. When to best to get into whenever something looks like this, where it's falling straight up into face rip. Face rip is basically straight up, no red candles, just straight up, and then obviously that's eventually going to be straight down. Right? Markets usually take the staircase up and the elevator down. But with cryptocurrencies, it's actually the opposite. They take the elevator up and take the staircase down, down, down. So you gotta watch out for that. And I'm going to be showing you when to buy. Now you're thinking, okay, we'll draw my fibs on this, but anyways, we'll talk about that in later, this particular market later. But let's take a look at these two markets right now. So, anyways, let's look at this PIVX here. Now you're thinking, oh Jesus, man, I want to get into this. So guess where your buy level is? Right here, right? Obviously I'm going to be explaining the Fibonacci, or right here as well. Levels later on, but yeah, I mean, it makes sense. But look at what happened. It just kept going straight up. All right. So, but you know, sometimes that's going to happen. You just got to let it go. Just let it go. Do not chase these markets. You just don't know what's going to happen, right? All you can do is like draw your fibs and then set your buy levels, right? So draw your fib at the higher level, right? And this is where you're gonna buy. See, look at that, boom, boom, kaboom, right here. You got your fill, right? And let's see, did you get a double? Or almost. So if you bought at 4.004, almost, you would be selling at point. Oh, yes, you did. Look at that. Boom, boom. See how that works? Right there. If you just bought here, I didn't buy this asset. I don't know why actually. Let's see here. If I look at my account, I wonder if I did. Let's see if I did. I don't remember doing that. PIBX. I think I probably did it at 61.8. Ooh, look at that. I went a little bit higher than the and where's my sell order? Why is it all the way up there? Interesting. I'm not sure. Oh, it's because I didn't set the sell order. Duh. 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 Look at that. Okay, so my seller. So I bought this right about here. Yeah. Look at that. I'm gonna make some money. I forgot to set my sell order because I had two sell orders. A little bit, just a teeny bit at the 61.8, and a bigger order at the 78.6. So let's see here. I think I'll have to minus 200 from this because that's not right. So here, let's see here. 3. So it's right about here is where I'd sell. I'm going to sell half of this. So I'm just going to go 1, 2, and keep the change 0. There we go. And get my 1 Bitcoin back that I bought. And I'm pretty sure I'll get the fill. There we go. Damn. Look at that. Thank you, guys. You saved me. I forgot to set that sell order for that one. Alrighty. Which is one of the things you got to do, right? Every time you get a buy signal and it tells you to buy, you got to remember to hit the sell order. Sometimes you forget, right? Because especially me, when I've got so many things going on, so many cryptocurrencies happening, I forget to do my work, and that's how you lose money too. So if you don't keep on this, every time you get like a signal, right? You should do it like set a time frame for when you're going to do all the work, and that's obviously going to send you an email letting you, this particular application, Coinigy sends you an email letting you know when you've gotten a buy order, and so that you can actually go ahead and set the seller. So there you go. I mean, it works, right? Now, of course, nothing works 100% of the time, so keep that in mind, right? And I could prove it right here. Right? If we set the fibs here, right, you can notice that the 78.6 is right here, and you just got hammered, and you're like bag holding all the way, which I am bag holding because I did buy at these levels all the way till this point. So that's why you have to also manage your risk. I would suggest, right, you only put in like a very small amount, like 0.025 at the 61.8 and zero point 0.5 at the 78.6 level, and then you'll see that then you won't lose any money, because then you could wait until this thing bottoms out, and I'll explain how to detect when it's finally bottomed out. Right, alrighty, so back to the lessons. Alright, so we're gonna, of course I'm gonna go over the fibs and Fibonacci levels and so forth later, but let me go over some terms here, right? An ask, right, is to ask for a price you wish to sell an asset for. So for example, when you hit a sell order, that's an ask. So you're asking for this much, the higher price, the double, for your half of your cryptocurrencies. The bid is to state the price you're willing to buy the asset for. So you're going to be asking at a lower price, right, than the actual market is offering at the current time, and that is your bid. Now, a stink bid is when it's really low below the market price. Usually a stink bid is something like at the last bottom or below the last bottom and stuff like that. It's a low price basically, and you can catch a lot of fat fingers that way. What a fat finger is someone here. I caught a fat finger today, and I'll show you that. Oops, I don't want to change that. I'm going to go here. ARDR. Caught a fat finger today on ARDR. Let's see if this thing loads. And you can see here, look at that. It came all the way down, even lower, right? And I believe this was the 78.6 level that I made the purchase on. No, it wasn't. It was because oh wait a minute, because this is an hourly. Let me switch to daily. Come on, you can do it. You can do it. Come on, boy. Come on. Darn it. Sometimes you gotta refresh this thing. Alrighty. Come on. Okay. Load. Load, baby, load. Load, baby, load. Okay, so I caught this. This happened all on a flash. So somebody actually, what I did is, they probably accidentally sold a whole bunch when they just wanted to put a sell order, probably higher. But what happened was they sold it at the market price, at whatever price they can probably get, causing the market to go straight down until the complete order was filled. And usually that's called a fat finger order. You want to avoid doing that at all costs. Now, thank goodness, Coinigy does not give you the option to sell at whatever price available, everything at whatever price available. In order to do that, you can do it. In order to do that, you'd have to say, okay, well, you know what, I'm going to take everything I've got. Let's just say this has nothing because I want to buy some more down here. You take everything I got, right? I'm going to sell it, and then you say, okay, I'm going to sell it way down here. So that's what it'll do is like whatever orders are available, it'll just fill them all the way down. That anybody's doing a bid is going to fill the bids until this complete order is filled. So that's the only way you'd be able to do a fat finger. Obviously, you're not going to do that. But you can catch these fat fingers, and I've caught quite a few, right? And then the market just comes right back to where it should be, and boom, there you go. You're in the money. So I haven't gotten my fill yet. Hopefully, because after I got the fat finger, I should have gotten filled, but because I did not immediately set my sell order, I didn't get my fill. But that's okay. I will of course, eventually get it. And I'll leave it at that. Because this is a little old lady style, so I'm just gonna sell half on the double and just wait for it to happen. If it happens next year and not this year, that's fine. I'm cool with that. I don't mind. I'm in it for the long run, so that's how I'm following the system and nothing else. So, where was I? Okay, back here to the term. So that's what a fat finger is. Oh, I don't know why it keeps doing that. So you want to set these stink bids. Sometimes you might want to set a stink bid, especially with these cryptocurrencies. It happens all the time. Not only does it happen on a downdraft, it also happens on an updraft as well. You'll see a lot of fat fingers, but some of them are not just fat fingers. They're actually pump and dumpers. They just pump up the coin, and so you get all your fills. So that's why you want to set more than a sell order every time you get a buy order. Okay, so that if somebody starts to pump up the coin like crazy and you go shooting up and coming back down, you're already ready there with your sell order to get paid. Now, fibs is basically a short form for Fibonacci retracement drawing tool, so I'll use that a lot. Draw your fibs or fibs. RLZ is the reload zone, right? It's the optimal location to buy and sell an asset, aka also known as a trade location. And what is the key thing with real estate, people? Anybody give me the answer in the chat room? There. Oh, that's right. There's a little bit of delay, so I guess you're not going to be able to answer me right away. But I'll give you a second. Do 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 do. What are the three most important things in a real estate transaction? When you're buying real estate, it's location, location, location. That's right. So that's the optimal location is in this between the 78.6 and the 71.8. Sorry, 71.8 and this. Sorry. Oh, Jesus Christ. 61.8 and the 78.6 levels on the fib. That's actually the reload zone. Now, SMA stands for simple moving average, right? We're going to be studying those later on. EMA stands for exponential moving average. Again, we're going to be studying that. Market cap, we'll be going over a little bit of that with the fundamental analysis. This is the current price multiplied by the number of existing assets. So, to give you a quick example of that, it's the market cap. If we go to the economy here, you can see the market cap of Bitcoin is $36 billion because we're going to take the current price, multiply it by the total supply of Bitcoins, and this is an ever-growing supply, and then you get this number, or get close to it anyway. So, and that's how the market cap is calculated. Fundamental analysis is analyzing the things that may affect the price, usability, number of existing coins, etc. And now we'll be going over some examples of fundamental analysis that you could take against a particular cryptocurrencies and what you can do and how you can use that to your advantage. Technical analysis is analyzing the price patterns to predict the price movement. So I mostly use technical analysis now. I started off with FA, fundamental analysis, but I noticed that I was out of a lot of the face rips, huge face rips, because my FA analysis didn't allow me to buy those particular coins. So I decided to just stick with technical analysis and take the losses if the coin goes to zero. And close is the price of the market price the market ends. I think ends for a particular period. Yeah, ends for a particular period. Open is the price the market started for a particular period. So it's really simple, right? I mean, you've seen it with if you watch the other class, You know that with the Japanese candlesticks, here we go over here, that this actually opened up to the top here with this candle and closed. Well, it hasn't closed yet, so let's start with this candle. This green candle started here, right? That's the open, and ended here, and that's the close. All right, so that's what open and close is on when you're dealing with terms for trading. Now let's go over the Fibonacci. Fibonacci retracement is a very, very, very popular tool among technical traders, and is based on key numbers identified by mathematician Leonardo Fibonacci in the 13th century. Right? If you don't remember, you're in high school or middle school learning about Fibonacci is really simple, right? Basically, it's these two numbers added together equals the next sequence number. These two numbers here, 1 and 2, equals the next sequence number 3, right? 2 and 3 equals the next sequence number 5, and so forth and so forth and so forth, right? The Fibonacci ratios are basically 23.6, 38.2, 50%, 61.8, and 78.6 and 100%. The ratios we'll be concerned about are the 61.8 and the 78.6 as our buy levels. Now, technically, certain numbers there are not exactly Fibonacci, like the 50% and the 78.6, but I'm not going to go into detail exactly why they're not. It's just that they were added in because these are the levels that the market tends to go to a lot. So about 50% and 78.6. Now, if you don't believe in Fibonacci's, get ready to have your jaw drop. I'm going to drop this video into the chat room. I hopefully some of my friends there that are watching this video from my WhatsApp group are on the chat room, because if you're not, you're gonna miss this video. You should check this video out, and you will be amazed how the Fibonacci numbers exist everywhere in nature, with borrows and stuff like that. It's just unbelievable. You will be so impressed, and you'll know why. You'll be more confident in using these numbers, these Fibonacci levels, in order to buy your cryptocurrencies. Now, of course, nothing works 100% of the time, as I've shown, but in general, this is a good way. This is a very good method to use. Now, see, these are the numbers that we use, and I want you, when you have for your homework, I'm going to be also mentioning that later on, to enter in these numbers. Oops, let me just quickly draw a Fibonacci level here. What asset is this? This is Bitcoin, so right here. So these numbers here all of these numbers are important, every single one here. And if you fill in your Coinigy account Fibonacci tracement tools with these numbers, right, we'll be talking about them in an advanced class on how to basically determine where the market's going using these numbers. So enter them in, and we'll show you how to, in the next class, how to determine where the market is going. And you will be surprised, right? I can just to give you a quick example. Fibonacci works the opposite direction as well. So if we go like this, up to here, generally the market ranges for about 70 to 80% of the time. So a good chance that this particular asset Steam can get up to 61.8 and then come back down and range back up and down, up and down, up and down in this area. And so look at how much money there's to be made, because this is way down here, right? And this 38.2 is called the first stop target, right? So I mean, still, even with the first stop target, there's a lot of money to be made here. So we can use it in the opposite direction, right? So that's one way. That's one thing we're going to learn in the next classes, and is this advanced technique. Alrighty. So enter those numbers as your homework, right? We'll go over that. So I think I hopefully, you know what, I don't feel I've covered this well enough. So let's choose another asset, another random asset. Let's see here. Okay, this is a good one. Let's choose this asset here, and we're going to check off. Oh darn. Okay, here we go. We don't need any of these because you're going to be buying at these levels. This number here is just the midpoint. You can use that as a like, hey, you know what, I'm not too sure this is going to get down to 78.6, but and you can set that level as one of your levels you buy at. That's up to you. So look at this particular asset. I mean, it went straight up, came back down, right down, and yeah, I bought down here and I got my fill, right? I remember this one, right? So look at that. It works pretty much all the time. Let's choose a random asset, because this was not random. I actually had this one up before, and let's do that again. Open in a new tab. I want to keep those up, and we're going to choose. Okay, I don't know. Let's choose something. Hopefully something that did a face rip already. I don't know. Let's see what happened with this thing. Red coin. I hated this coin. Oh yeah, because it stayed down for a long time. So I mean, it hasn't got even to the 61.8. So you're not buying anywhere in this area. This is called the no man's zone, right? For you guys, you don't buy down after this face rip. And really, just look at this. The 78.6 is right at the last top there. 21. And look, it's close to the other the other tops there. If we let's switch to weekly. Yeah, and look where the 61.8. That's not a coincidence, folks. It's at the last top. So, and the reason why that's not a coincidence is because if we look at this, markets trend for 30 to 20% of the time. And what a trend is basically moving in an upward direction or down direction. And generally the market goes up. When it's trending, it goes up, it comes back down, goes back up, and comes back down, and goes back up. And what this is creating is higher lows. So this low, right, is lower than this low. So this is higher low, right, and higher highs. So this high is lower than this high, so this is a higher high than this high. And you can see that in the Bitcoin right here, where it goes up, comes back down, goes up, comes back down, goes up, comes back down. But each of these lows are higher lows. This is a higher low than this low, and this is a higher low than this low, right? And we've got higher highs. This high is lower than this high, so this is a higher high than this high, and this is a higher high than this high. And so this is how the market flows when it's trending up. But for most part, for 80% of the time, markets range, meaning they just go up and down, up and down, up and down, up and down, like a whore's drawers, right? So you can actually still make money on this, especially when it's ranging, because you're going to be buying down here at the bottom, not up here. Because remember what I said on duty. You'll be buying down here. And so there's a lot of money to be made even when it's trending. Ranging. And so Steam, for example, it probably is going to range for a very long time after this massive disaster. And it'll just probably just come back on that. It'll go up, come back down, probably to the bottom here, because I'll explain this later. But it just went straight up. It didn't like do any kind of like market structure. So in order to indicate that it was going higher, meaning the W, basically this little drawing pattern, it didn't do a higher high. Oops, let me just do that again. Oops. Oops. Okay. Let me just draw another one. So it didn't come down, go up, come down, but not quite, and then go up. It just went down and straight up, V pattern. Usually V bottoms actually just are like the market has to come back here. So that's probably what's going to happen. Maybe now it might go a little bit higher and then come back down. Who knows? But generally, it comes back down to the bottom, the last bottom, just to test the last bottom. Whenever it just does a V bottom away from it. All right, so let me just clean this up. Ooh, okay, I need to change to this pattern. Goodbye. See you later, alligator. In a while, crocodile. Alrighty. So, let's try that again. Right? So we're going to buy at this level. So if you want to buy this asset, this is where you're buying. And how much you're buying? I feel that this is up to you, right? I feel that most assets, you should do only 0.5. Now, most assets. This one particularly, because it sucks. I mean, it's terrible asset. But it's totally up to you, and I believe you should go 0.25%. Sorry, I'm going to put percentage here. Percent. And then at the bottom, the very bottom, the last bottom, right, you would go, well, on this one, if you can get the one Satoshi for this, great. I would go all in. Well, whatever your all in is, I wouldn't go more than, I'd go 1.25 on this percent on this asset. A total of 2% spending on this asset is where I'd go at the very last bottom. Right? So that's what I would do. That would be the maximum I would go in this particular asset. That's a lot of money for me, because that would equate to about 2 Bitcoins. Alrighty then. Alright, let's choose another asset to see what we can see. I don't know. Let's see what's this one doing. WBB. What are you on dailies? Okay. Alrighty. So, on this particular asset, ooh, look at that. I bet you that made it at least at 61.8. So if we draw from this turn here, look at that. That's why sometimes you might want to add that midpoint and go, okay, you know what? I've missed a lot. I'd like to just buy the midpoint too. It's midpoint too, so you can decide whether you want to do that, right? If you did that, you would have gotten a fill and probably gotten a double. Let's see here. 34. Let's zoom in a little bit. Yeah, you would have gotten a double, because you would have had to sell it around 0.0070 right here. So look at that, nice little stink bid right down here, got you the fill. Yeah, probably even the 61.8 got you a fill, right? So if you had 0.25% on there, right? You would have to sell at, let's see here, 84. Yeah, look at that. You got a fill. You got your double on that. Simple as pie. I mean, it's incredible. This is incredible how this thing works if you do the work. I mean, I didn't do it for this coin. I know I didn't. Because I've got just so many coins to keep an eye on. It's impossible to get them all. Right? Look at them all. But if you really spend a lot of time on this, whew, will you make money fast? But I only spend like anywhere from 20 minutes to an hour a day on this, so it's. But if I know people who just spend their 8 hours doing this, and if you're looking at every single coin, you're gonna get a lot of these, and you can easily double your money rapidly if you can make this your full-time job. But you don't have to, of course. PVC, well, this one does not have anything going on, but let's just do it anyways. Even on a small scale, right? We can see that this thing is not moving, right? It popped up a little bit, but nothing's really happening. If I'm just quickly looking at scanning the volume, I'm thinking, okay, this thing is definitely going to come back down, right? I wouldn't trust it too much because it's got a 50 million supply and a 1.7 million market cap. Ugh. All right, I would be buying down here, probably even down here, right? Because of this gap. Now we talked about in the Japanese candle that gaps like to be filled, and this is a daily. Yep, this is a daily gap. So a gap here is probably a good area to set your buy order, because the market needs to probably fill in this gap. Even like you could even do a stink bid. I would suggest you do a stink bid. If you're doing a stink bid, I would suggest you would put it at this last candle body. So this last candle body is right there. Forget the wick, right? And put a stink bid right here, because who knows? Somebody might just be like, okay, I just want to get out of this thing and sell everything, and it just comes crap screaming down here. So a stink bid down here would be okay as well. So it's totally up to you how you do this. But if you do follow just the 61.8 levels, for this coin, I would go down here, either here or here, and put in 1.25% or 1%. Actually, I would only do 1% in this maximum 1% in this particular asset. It's pretty shaky. The odds of it going to zero are pretty high. So really, I'd just do 1% on a stink bid, and I'd forget about the 61.8 because this thing is not a high-end asset. That's a little bit of fundamental analysis right there. I can pretty much tell that this is not an asset that's going to easily take off, and so I can either set it here and just start nibbling here. So generally what I do is nibble here. I'd probably just go, if I really wanted this asset, I'd go 0.25% here. Now, if you, of course, right, so whatever amount of Bitcoins, in order to do that, right, put in the percentage, like you don't know how much it is. If you just use this simple spreadsheet right here on Google, right, so all you have to do is put in the percent, right, put in how much you want to buy, how much you have in your account. So if you look at your balance of your account, I'm going to quickly open the balance. I haven't done anything in this particular account. In the new tab. But I'm going to be trading this account with you guys. Skip. And you can see my balance is, 0.5, so I could just put in 0.5 there. And I'm going to put in 0.25%. And it shows me exactly how much I'm supposed to buy if you just multiply the A2 by B2 cells, it gives me the exact amount I'm going to be spending for this particular asset at this particular level. And then I can do that again for 1%. I can say, well, we already know what 1% is, but because that's quick 0.005. So 1%, I could do 1%, and that's probably the maximum I'd go. Probably just go 7. So that would mean I'd probably just do 0.75 here. If I want to do a maximum of 1% in this, 2.75. Right down here. So I'm going to draw a line. And I think this is where I'd be buying right here. Me personally. But you could also set a stink. I've known people to do the stink bids right here, especially for an asset like this. Jesus. That the bear that hasn't existed for very long, right? Low market cap. You don't know much about it. Maybe you can do some. I'll show you the how to do fundamental analysis to help you determine if it's worthwhile buying. Better fundamental analysis to determine if it's worthwhile buying, and so forth, later on in the class. But generally, I just do technical analysis, and so this is a particular technical analysis. Is the gap theory, and the gap theory is basically gaps like to be filled. So the market wants to come back and fill this gap that I left here. So let's do that again. I like drawing fibs, the fibby fibs, so that you make sure that you guys got this down pat. All right, I don't know. Let's try this particular asset. Oof, look at this thing. Off to the races. Jesus. I wonder if I got some fills on that. I'm pretty sure I did. Because I bought this a heck of a long time ago. So yes, even though, it face ripped straight up, probably this was either a fat finger or, a market pump or something like that, you still have to set your fib level, your top level here, not down here or down here, right? It's got to be right here. So the market did trade there. And this is a good level, actually. Look at this, because there's a lot of traffic here, right? A lot of price movement here. So most likely this level might hold. No guarantees on that. This is a very new coin, so there's a good chance. With an under $10 million market cap, good chance it could come back and visit its lows. But I would do a little bit more fundamental analysis on this in order to determine whether or not it would come back. And once again, I will explain some FA on that. Can take this off. So yeah, I would definitely put some buy orders right there. I wonder if I did that. Let's take a look at some of my stuff. See if I've been following my rules that I'm telling you guys to do. Alright, so let's see what we can see. So did I do that here? Yes, we did. It's at the 78.6. Well, close enough. It's just a little bit lower because I want to take, because I'm a cheap ass. I want to get things on sale. All right, let's take a look at another one of my buy orders. Let's go click on all markets, please. Are you gonna work? Oh, of course not. You're just not. You're just dead. Alrighty, I'm just gonna refresh you then. If you're gonna be like that. Oh, yeah. Alrighty. The joys of the internet. Is this thing working? Are we on? Are you working? Oh, why did I want to? Oh yeah, I wanted to use this for volume. Yes. Come on. You can do it. Come on. Alright, whilst that's loading, let's look at another coin here. Yes, I'm going to do this like crazy until you guys actually get it. Until you understand what's going on. Right? Okay, let's see here. Yeah. Is that the last load? Yes, it is. Okay. Now, the question that I'm sure you're probably asking, well, how do you know where to draw the last low? Well, once again, let's go back to here. Markets, when they trend, they go like this. So guess where you can draw your fib from here to here, right? Or from here to there. It's up to you. I generally take whenever I see like a large like straight up thing where it's not coming back. So you can see. Let's see here. It's not coming back. It doesn't come back to the 71.6 or 61.8 when it takes off on here. Again here, doesn't come back. All right, there you go. So these are last. This is the last low. You can use either these ones or this one. It doesn't really matter at this point in this particular asset. And you could also use like the ultimate low, but right down here, right, and then this is a nice stink bid because look at this. Look at where the 61.8 is sitting, where it keeps coming back to. Back to here. That's not a coincidence, right? That this is happening. And it bounced away. Not a coincidence, right? So, yeah, could it come back down here? Maybe. Nothing's guaranteed, but you can see that it's happened a lot. Right? So it's a possibility that it's come back here. You could put a, 0.25% buy order here, and then just load the boat here. Like I would trust this asset with 2% of my money. I wouldn't go. I've gone 5% in this particular asset, but I have my reservations. Right. With the development team and how they distribute these coins and so forth, and what they're doing, what they plan to do with this coin, and with the price. What I've read is that they want to keep the price within a specific band, so they are making it range between here and here is probably what they're doing. So again, they'll run out of money before the market actually will pressure them out of that. This keeping it in the range, because they'll probably run out of money and run out of these coins. But who knows? Might take a while, and it'll probably range for a while. And so once it does that, right? Or once they run out of money, then this thing's gonna shoot the moon. Especially if they keep this thing in this range. What happens is the market will coil up, and then straight to the moon. If they if they're actually doing that, right? Now, again, they have to produce their software. I don't know if this is actually working, and the use of this. I believe it's a storage facility, and you use the coin to pay for storage on the cloud storage, but I'm not 100% sure if it's up and running. I know that Made's not, but Made is another cryptocurrency that's planning to do the same technology. But I'm pretty sure they had some a beta test when I first looked into this. But anyways, I'm going off topic, chattering a little bit here. So yeah, 78.6, good place to buy this coin. Because, like I said, this coin might range for quite some time. Alrighty, I wonder if this thing actually loaded yet. No. Wow. What's going on? Ugh. Okay, I'm closing this window. Ooh, I think I spoke too soon. And I'm opening a new tab. Alrighty, please. Okay, thank you. Are you gonna do it? Are you gonna load? Load? Really? Seriously? You're gonna do this to me again? Alright, thank you. No, really? Alrighty, there we go. Okay, thank God. Alright, so let's, oh, still? I can't scroll down. Oh, Jesus. Alrighty. Whilst we're waiting for that one to load, let's choose, oh, NXT. This is a decent coin, right? Easy one to make some money off of, right? Again, you can see 61.8 is actually what we call a mountain man. I wonder if we have the mountain man. I don't have the mountain man icon ready, but this is a mountain man level because this guy, mountain man, he's in a trading room, and he always makes money off of the 61.8. But he actually day trades that, and the 61.8 is his level. He buys the 61.8 and he sells on the bounce every single time. Seems to always get it. Just unbelievable. Well, not every single time, of course, but he's always walks away with making money. So 61.8, it's a good level to buy, right? Probably you wouldn't get a double off of that. So let's just see. Double's way back here. I would suggest if you see that the 61.8 does not give you a double before you do this backwards, right? Before the 61.8 level, not to bother even buying at the 61.8. Just don't do it at all. So you can see there's no double here. So when there's like this is straight up kind of thing, and there is no double, it looks like it might be coming back, I wouldn't buy at all at 61.8 unless it's a shit coin, which is any coin that's there's another term right there, shit coin. It's a coin that has a low market cap. Anything under, I would say anything under 10 million market cap could be considered a shit coin. If you do a little bit of FA, you might be able to pull it out of the shit coin category. So this is not a shit coin, but I don't think it's going to come back all the way up here from here to give you a fill on a double. So I would suggest you go all the way down to 61.8 and probably even look for a better entry below that 61.8, which I will explain by using moving averages. How to do that. Now, please tell me this. Oh, Jesus. Okay. I guess I can't show you any of my my market, what I'm buying. Jesus. Because just the internet's either not working here on Google Chrome. Okay, finally. Like, what the heck? Really? You see, it's still loading. Unbelievable. Alright, well, I'll come back to it, I guess. Well, I think we've exhausted the fibs, right? Let's move on to the moving average. Right? We're going to learn we're going to learn how to use the simple 200 moving average, I would just say moving average, not simple moving average, just to make it easier. But it is technically the simple moving average, but I just shorted it. Most places shorten it down to just MA or moving average as a point to buy an asset, and also use the 13 MA exponential moving average for trends. The SMA is as simple as it sounds, as it is the sum of all closing prices divided by the number of closes. In this case, 200, right? The EMA, oops, jumped ahead. The EMA is a weighted average.
It's 8 o'clock.
Thank you, Siri, for that reminder. I started blathering on and went on and on and on and didn't realize the time. The EMA is a weighted average where the most recent price have more effect than the least recent prices. So on this chart on the side here, you can see, right, prices are hugging. The yellow line is the 13 EMA. Right, you can see the yellow 13 EMA color right there, and price hugs the 13 EMA as it's trending upwards. So you can see that this market is trending. Yeah, there's some fat fingers happening. So if you see the trending market, you draw your fibs and you can probably get in, right? So that's just how you can tell. Oh my God, it's taking up. It's going to the roof. It's going to move. But you can't panic and go, oh my God, I gotta buy up here. No. Draw your fibs. It's at the 61.8, and look at that. You would have got your doubles, all kinds right there, right? You would have gotten in here or gotten in here if you didn't realize it until later. It's 61.8 level, right? And gotten a whole bunch of doubles. Boom. Right, and you can see the 200 moving average, right? It's just slowly moving up. So let's see that in action here. Right, before we do that, I want to see if this thing is working. One last time. Nope. Nada. Bupkits. Sud. Oh. We have movement. Let's see, I think maybe because this thing has been running for too long, Google Chrome. Let me see if I close these windows. No, I don't want to close them. Did I already do that? No. Nada. Now we get like the max circle. Alright, screw it. I guess I'm not showing you any of my accounts, my trades. Alrighty. So, moving on to 200 moving average and the EMA. So to add them, right, I'm going to show you how to add those. We're going to click on this indicator setting here. And we're going to type in moving average. There we go. So you can see the moving average, right? This is really the simple moving average. So we're going to add that. And then we have the exponential. I'm going to add that. So you can see they added them right here. When I clicked on it, it was added. It didn't close this window, but it was added the second I clicked on it. So I can just basically add a whole bunch of indicators without having to go back into the window every single time to add the indicator. So because the colors are the same, we're going to change the colors and width and so forth, and basically the closing so this is particular the MA, the moving average. Did I click on the MA? Let's see here. Yep, moving average. I'm going to change this to 200. We're going to click on style. We're going to make it a little bit fatter so we can see it. I'm going to make it juicy fat. And I like brown for the moving average. This color. And then you could change like the contrast, whether it's faded in or faded out. Let's make it fully contrasted. Head over there. right? And we can also add we need to change this exponential moving average from 9 days to 13. Oops, too many. And let's make this yellow because I want it nice and clear and nice and big, so we can actually see that thing. And you can see the price hugged it all the way up, and price hugs it all the way down. And of course, you know, if you draw your fibs, you get your fill, just like we said before. But look at that. If you set your price to the 200 moving average, almost got a fill there. Not quite. So you could have set also your buy order at or close to where the 200-day moving average, and that's a good point that's also a good place to buy, and especially when it connects with the 78.6 or gets close to it. So this thing's moving up to 78.6, so as it gets closer to it, it means that the market was probably going to roll up, and if it stays away from it long enough, it's going to be a very hot market. Let's see, let's check out another asset with these moving averages. Okay, this is a good one. This is a good one because notice there's a cross here. The market crossed the moving average because it went straight down. And notice it starts here because it needs 200 days in order for it to start calculating. And the market was far below this thing on AMP, but you can see because when it crosses the 200 moving average, that's also a good sign that this thing is about to blow. So you can set your fibs, and now because you know that this thing is about to blow, you can actually choose this low instead of this one down here. Right? You can still choose that low here and maybe get a fat finger, right? Because look, when it crossed, even that a fat finger by a bid right down here got you filled. And if you looked at it closely enough, you can see. Let me see here. It's in the way. The volumes are in the way, so let me just close that. So you can see that you could have, at any point in time here, like right here, if you saw this thing taking off, you can see that you could have gotten a fill. You saw this thing taking off. You can see the thing cross the 200 EMA. Alright, I'm going to buy. But where do I buy? 78.6. There you go. Fat finger. Got you filled. Got you in there. And probably even got you a double, maybe. Yes, it did. And so you've got a free position. So if you did a 78.6 and you did 0.05, which is what I would do probably trust with this thing. .5%. 0.5%. Let's see what the economy is. Oh, wow. $20 million market cap after collapse to nothing. Jeez. Not bad at all. I don't like the amount of supply, but it's pretty good. I do have some of this. But as you can see, over and over again, right? If you just stick to these rules, right, where you just do like maybe 0.25 here, right, nibble it here. You could have gotten in a nibble, right? You could have gotten a little bit more here, right, and started getting paid. So as soon as you got the buy order, you need to sell yourself half on a double. Get the buy order, sell half on a double. Now the next question is, okay, well, if I have two orders, what should I do with my sell orders? Should I average them out, right? Take an average of the two and then sell half on a double, as long as I get my full buy order. So let's just say I put in 1 Bitcoin here and then I put in like 2 Bitcoins here. Should I just wait until I get 3 Bitcoins? Well, guess what? That's up to you. Generally, because I have so much work to do with these coins, I generally don't do multiple orders. I just merge them, but sometimes I do. And when I do, I merge them. But I merge them after I get a a fill on both coins. So both orders. So for example, um, if I bought here, we bought here, and I hit green, and I bought here, right? I would sell this coin up here. Okay, 12, no, 13, right here. So look at that. You got to fill on that. Look at this. Well, here, I'd sell here, and for this one, I'm going to turn that to red. Oops, wrong one. For selling. And for this one, you gotta fill pretty much right away. Look at that. Not the same day. Yeah, the same day. Look at that. You would have gotten filled the same goddamn day. You got your money back. Then after that, I would take the average and, or get greedy, and then take the average right about here, and then I'd sell here. It would be my merged of the two, right up here, right, in order to like keep the amount of sell orders to a minimum. And so I'd get in, like, if I got 1 Bitcoin here and 2 Bitcoins here, I'd be selling 3 Bitcoins right up here, and 1 here and 2 here, and getting 3 here, as an example. So that's how I deal with that, the selling orders. So there you go. I mean, like, oof, getting paid. Actually, you would have gotten paid right here. Look at that. Look at that. I mean, this stuff works, right? If you do the work, find the buys, right? This stuff gets, you get paid pretty quickly. Somebody asked to do TA on waves. Let's take a look at waves then. All right. With the moving averages. Ooh, look at that. Nice cross, right? It wants to fly, right? Cross the 200-day moving average. And boy, did it ever fly. Now, unfortunately, never got a chance to get in. Because as soon as you saw it fly, I mean, I did exactly that. I had my bid order here and I never got anything. I mean, I did buy this thing on the way down, right, from here. So I got in here, right, and I think I got a bit more here when it started bouncing off the bottoms here. I think I got some here or here, but as you can see, right, I mean, sometimes it just goes and you just never get a chance in. But that's life. All you have to do is say next bus in about 20 minutes and find another asset, right? Waves is done. Do not be buying up here. Forget it. If you don't have waves already, you don't buy any more waves. You don't buy waves. You should be selling your waves. Right? This thing's hugging me. Notice how it's hugging the 13 EMA. That means it's like it's in a rip-roaring bull market, and it doesn't look like it's coming down just yet. Who knows? Could it double? Could it go higher? Probably. If I were to do some advanced analysis on this thing, I would say that I don't need that. I will go here for now. Here and here and here. I would say there's a good chance we can come all the way up here before it rolls over. But that doesn't mean you go out and buy this thing, because that doesn't count. Doesn't mean that it will, right? But yeah, there's a possibility using these are called extensions, but I'll explain that in the next class. There's a possibility they can go as high as here, 4 times from the bottom, 4 times from this level, from here to here, 4x. But who knows? The market will do whatever the heck it wants. Doesn't mean it will go there. And we can see that we're really close to this golden ratio of 2.618, right? It didn't quite touch it, but it's close enough. So it could roll over here, because this is an important ratio. And look at that. It stopped here, but it continued. Again, stopped at this ratio, the 1.618, close to it. Probably because I didn't draw this properly. I didn't set my magnets and stuff like that. Let's do that. Alrighty. Yeah, look at that. Pulled back exactly at the 1.618. Did it pull back at the exactly? Yeah, look at that. Right on the nose. Right on the nose. So, I mean, this is all part of Fibonacci's levels, right? So you can see how this thing works. Alrighty. Alright, so you can see how we can use both the 200 moving average and the 13 EMA to determine where the market's going. And if you can see the market's in a serious bull market here, because it's just hugging that 13 EMA. And once it crossed, it's like, oof, it's got to go. So we can tell that amp, right? As we go back to the amp, you can see that the amp it's ready. It was ready to rock and roll. It's tired of like this down market. But that doesn't mean you buy here. Where do we buy? In the location, the trade location. That is right here. Location, location, location. This is called the reload zone. And that is where we buy, and nowhere else. You can buy up at the 61.8, you can buy halfway, you can buy at the 61.8 level, or below. You don't buy here. Right? You're not like, well, I don't know, D, maybe if I draw my fibs, fine. You know what? Actually, you can do that too. And you know what? That's fine too. You want to do it that way? That works. Yeah, that works. And then you can say, okay, well, you know what? I'm going to do that. Because look, 61.8 hit. And that's fine. Because as long as you're not buying at the absolute top, I'm cool with that. Cool with that. And so obviously this would move up here. And so yeah, I'd be cool with that. If you did it like, okay, you know what, I'm just gonna get the 71.78 because I know this thing's flying across the 200 EMA. I didn't get it there. I want to get in. I don't want to buy up here. Okay. I'm gonna do it from this last turn here, or you can do it from here as well. But notice this was the right one. This was the right turn, because you can see you could have gotten in on 78.6 level 2 buy, and did you get a double? No, you won't get a double until right up here, 1900, till new highs. Kind of dangerous, right? Because this thing could come back to visit here, down here. I don't see any gaps. Oh yes, there is. Look, gappy gap, right there. There's a gap. And so you're risking a lot that this thing comes all the way down here just to to take a boop, boop, and then come back, then go back up. Alrighty. Well, that's enough about moving averages. Let's move on to volume to help us determine price. Alrighty, so I have Faircoin open up right here, and you can see, right, we've got on-balance volume and on-balance volume and on-balance volume EMA. So let me just go over that a little bit. Ah, yes, I forgot to mention, volume speaks volumes, because it helps you also indicate that the market is in a moving direction, even though it's moving down. You can see that in the Faircoin, it's moving down, it's moving in a downward direction, but the volume is coming in. And we are going to use the volume indicators called OBV, or called on balance volume. A simple calculation of the down days are minus from the total volume in history of the coin's trading history. So each volume bar for the closing period, right, is a particular number, and that's for the green ones it gets added, for the red ones it gets minus, and that's all there is to it. And the EMA of the on-balance volume EMA smooths out, because you can see it just goes zigzag, 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 the OBV. So it's a little difficult to see what's going on if it's zigzagging around. So to smooth it out a little bit, you can use the 13-period EMA, or exponential moving average, right, which hugs it a little bit, but at the same time keeps it a little smooth. And you can see that the market came back down, started like collapsing, and now it's coming up. You can see that it's moving up in an upwards direction, even though price is moving down. So let's go and add the EMA to one of these charts, and to show you how to do that. To do that, right, all you have to do is type in, click on indicator, type in on balance volume, and there you go, you have it. And we could add the EMA as well, and then look at that, you got the on balance volume and the on balance volume EMA. And now you might be asking, okay, that does not look right like what you got, Davinci, in this chart. Yeah, this is where we learn how to merge all the indicators together. But before we merge them, let's change some of the colors, because I can't see jack with that. For the EMA, right, we're going to make this thing a little bit wider, and I like the yellow color for the EMA. For the on-balance volume, make that just a bit wider, and I like cayenne for that. And we're going to merge this thing together. So we're going to go merge down. Boom. Now, this does not quite look right. So how do we fix that? I believe you have to set the scale. Let's see here. Okay, hang on. It's right here. Scale left. There we go. That looks right. So you have to set the scale left for the on-balance volume exponential moving average after you merge them two. Now you're like, okay, well that's still not right. The volumes are up here. No problem. You can just go over here, see where the volume is right here, true volume right here, volume, and the settings are true. And then we just move down, merge down, and there we go. You have your volume and your EMA, your on-balance volume and your on-balance volume EMA, all together, all in one chart, so you can see. And you can clearly see with the M, oh boy, look at that, volume is just coming in. You can see it down here as this volume's coming in. More and more people are buying into this. coins. So this thing is ready to blow. So you can set your buy orders wherever you want. I would suggest most likely set in. I think it's probably too late maybe to buy, but you could try setting it right here for like and hoping like a 0.25% here. I would suggest maybe, and I'd suggest the 50.05% down here. Right, because who knows what's going to happen. I think this is a little bit too high to be buying, but if you want to buy it, that's fine, because you know we did draw the fibs, and it is in a buying zone. But that's totally up to you. I can't guarantee what's going to happen here, because anything can happen. Full disclosure, I'm long and I have a lot of this coin already. So that's how you use the on-balance value, how you merge these two together, and you basically looking for it for volume to start coming in, and this EMAs start moving in an upward direction. And that's how it's done. Alrighty, let's move on to the next subject matter. Is basic fundamental analysis. What is fundamental analysis, or FA? Fundamental analysis is a method of evaluating an asset in an attempt to measure its intrinsic value by examining related economics or financial and other quantitative and qualitative factors. Qualitative and quantitative factors. Fundamental analysis study anything that can affect the asset's value, including macroeconomic factors such as the overall economy and industry conditions, and the microeconomic factors such as financial conditions and management. The end goal of fundamental analysis is to produce a quantitative value that an investor can compare with an asset's current price. Now, what that basically means is you look at certain things outside of price in order to determine whether the price is too high or too low, whether you should buy it or not buy it. And so I have basically a document here, and I'm going to share this document that I used originally to do FA, my FA that I use, and I'm going to share this document with you guys in the chat room here. Oh man, how long am I running this thing? Jesus. I think I've been blathering. 90 minutes. Jesus Christ. Sorry about that, folks. I didn't mean to run this thing that long. I guess time flies when you're having fun. Alrighty. So, if you take a look at that document, I'm going to open that up right here. You can see the critical thing you want to look at if you guys are looking at this document. I'm going to check to see if people are looking at it, because it'll show me, is the scoring method. Now, this scoring method that I've come up with, right, looks at the supply, right, giving a point score if it has less than 25 million in coin supply. The market cap is greater than 10 million. You get some point. New features added in the last 6 months, right? So you have to actually, in order to determine that, you'd have to go into the GitHub and see if somebody, the developers are actually working on it. It has a trading history going past 2014. I mean, this is an old document. This was originally written in 2015. Right, listed on four more exchanges, giving you +1, and then minusing, listed on one exchange, giving it a -1, right? And if it has greater than a billion, it's got a minus. Look at all the people looking at this document. And given greater than a billion coins, -1. No devs talking to GitHub or talking. Like, you got to go to the what's it called? Blog Talk. Ooh, darn! You have to go to one of the forums, and you know what? I'm so sorry. I forgot the name of the forum now. It's Well, here we can find the forum right now. Coin market cap will actually take us to one of these forums, so we can go into the coins and we can see. And actually, you know what? You could actually see the GitHub as well. Here, let me give you an example of that. Let's take Dash. And if this thing, come on, load. Really? Seriously, dudes? There we go. So we can go onto the message board right here. New tab. And you can find this website. I wonder if you can find the GitHub from here. Ranking 7. No. No. Alright. So they have their own private forum. It's not exactly the greatest one example, but let me try another one. Let me try shitcoin. Walks. Oh wow. Well, Vox has his own forum too. Wow. Neo. Jesus. Not finding that forum now. Oh well. Oh, Bitcoin Talk. There we go. That's the website I'm talking about. Generally, practically, almost all coins have a an announcement page or something like that at this website, the Bitcoin Forum. So pretty much you can find the forum. If you find the forum, you might want to see what's going on. Are people talking about the coin? Is the developer there? Is he helping people? Right? You want to see that going on to give a particular coin a ranking, right? Of let's see here, new features added, right? Well, if there's nothing going on, right, you give it a -1. In the last 6 months, give it a -1. Also, googling a scam coin, right, will help you figure out if you see too many, right, people talking about how it's a scam, it's a scam. You might want to give that a -1. Coin trades has a trade history of 1 year or more. Is at an all-time new low, right? Meaning that it's got more than 1 year of history, and it's at an all-time new low. It's a -1. So the meaning that in 1 year, or if the coin's been around for over a year, and it's making new lows, you have to take away some points. So generally, the highest score for any coin, but using this point scoring system, is 5 points, of course. And then I talk about how to buy and what to do with these coins. But you know what? I'm going to be updating this particular fundamental analysis sheet because it really helped me stay away from coins that went to zero, but I missed out on a lot of opportunities that I'm willing to. So I'm willing to let a lot of my coins go to zero in order to gain on some of the big opportunities, because some of these shit coins, I mean, they go 100x, and so if I lose money on one coin, I gain 10 times on one other. So who cares, right? I mean, I've lost 1 Bitcoin on Max Coin, which was a crappy coin. I shouldn't have bought it, but you never know with these things, right? They'll they'll take off without you for no reason at all. Even though there's no developer going around creating the coin or helping the coin exist, because for some reason people just try to pump it or dump it and stuff like that. So that's why I do that from time to time. I don't. That's why I don't use fundamental analysis all that much. most of it do with the FA is I look at, okay, coin supply, and this is a low coin supply. If it's very low, I like it a lot, because if it's very low, it tends to move up faster with a very low coin supply. Like, for example, Neos. I did a little bit of more fundamental analysis on Neos, and it's a very good coin, and it has a very low supply, because they did a reverse split, and that's what happened here, was the reverse split, right, at 10x. It had 33 million coins out, and now they went to 3 million. And because of that, look at this. It doesn't take long for it to do a face rip and start taking off. Right? And it's just hugging that 13 EMA. Now, I think this is probably the end of the move. Who knows? And so I would say you're buying down here, because look at this. The 200 EMA is about to connect with the 78.6, so this is where you gotta buy. Alrighty. And so that is some basic fundamental analysis. So, for some homework, what I want people to do, right, is right now you're ready to start buying coins, basically. You have enough information here to buy your coins. So enter those fib numbers, of course, right, that I showed you, because tomorrow we're going to be doing some advanced techniques, and I already showed you a little bit of that. And then also find some coins to buy and draw the fib charts, right? Set your buy orders and get going. Get putting in those buy orders, those stink bids, and wait for your levels. Don't chase any markets. Don't buy in the high markets. Wait for your levels. Buy a little bit here and there on each and every coin, and find coins. I know this is going to take some time. Just maybe set aside 20 minutes to an hour a day, right, to look at every single coin, draw your fibs, set the buy order, right, based on that. And here, actually, you know what I forgot to mention? Let's just say you set your fibs here and you set your buy order here, and price moves up beyond here, so you have to move your fib levels. So the good thing about this tool is that you can set all-time high as an alert, right? And you go breakout, set, and then you'll get an email that price is broken out to a higher point, and so that you have to move your fib tool and also move your buy order. Right, so you can use the tools that way as well. Another option that some people use this tool, the alert tools, which I've noticed, is some people would set monthly low. They would set a low price just above their. Let's just say they're just only going to do the 78.6. They set an alert order here, like halfway through. And just in case the market's not moving fast, it's moving slowly, stepping down, some of them like to remove that order and wait for the market to bottom out, because it could keep going down. And so you can wait for the market to bottom out, and then using other techniques, you can wait for the market to turn. Like, for example, if we did the 78.6, if we did the fib thing here, you'll notice something here. This is a bad example because of what happened to this coin, but you can see if you bought at the 78.6, you were hurting for a long time, even though this thing was coming down fast. The only reason why I did this is because it was a reverse split. So in order for it to catch up with the price, to move the price up, the price moved up only because this reverse split happened, so a lot less coins were available, and so the price had to go higher than where it was down here, and so it was an artificial move. So that artificial move caused this really fast down move. But let's just assume this was not fast. It was a staircase down. You can see, oof, you were hurting if you didn't move your buy order off of this thing. But I'm going to show you a little bit of, well, we already showed you this, some of this. Remember what I showed you in trending markets and between trending markets and ranging markets? You can see if we draw, oops, I'm going to need to get rid of the magnet tool. You can see here the price went up and then came back down. Oops, that was bad. It's down, came back up, came back down, but not quite all the way down, and went straight up. So, as you can see, this is called market structure. The market created what's called a W pattern, and it's probably clearer if you use a line chart. You can see the W chart, W forming. If you use a line chart, a little bit easier. Or even clearer if we use a weekly chart, probably. Let's see. Yes, no, maybe so? Yep. You can see the W pattern. Yes, no, is that right? Hang on. Oh. Oh. Oof. Maybe not. Hang on. Candlesticks. Okay, there's my W. Do we have a W? Oh, come on. Okay, delete this. Move this to here. Yeah, it's not that quite clear. Let's see if we move to line chart. Yeah, it's iffy. But weekly W's are very powerful. If you can see a weekly W that's really clear, right? It means that the market's about to blow. So that's why you would have the weekly. And I'm going to show you more of that on the advanced level of trading. Let me get rid of this. Go back to candlesticks. Okay. Okay, now I'm all lost in this thing. Yeah, let me get rid of these extensions. See ya, see ya, see ya, see ya, see ya, see ya. Thank you. Thank you. So, you could set your, again, set your alarm, and if it starts to if it's like slowly stair-stepping, you wait for market structure like the W that I showed here before you start to hunt for buys. Unfortunately, sometimes, again, like I said, you might not be able to get in, but I think you were able to on this one after it took off after it did committed its market structure, took off, came back down. Yeah, you could have gotten fill, not well, at least at 61.8, or you could have just like bought at halfway mark and said screw it. And look at that, you're good to go. Good to go. Alrighty. Right, so also find some coins with having increasing volume in the on-balance volume and the on-balance volume EMA. Sorry, on the on-balance volume EMA. So you want to look for volume increasing. Here you see, I don't like this. This thing's not right. I think we need to switch this as well to scale to the right. Yes. Forgot to do that. So that scale to left is better. No. Oof. Right. There we go. So you can see also here, if you see what is taking off, you can see the volume starting to come in. Right? Even before it took off, right? If the volume was starting to come in. Right? You started seeing the volume moving in, the volume, the OBV, the exponential moving average of the on balance volume was like moving in an upwards direction. Same with volume. So it gives you a clear indicator that something is about to happen. Right? So let's close this off because, oh Jesus, it's almost like 9 o'clock. Next class, we're going to be using a few advanced tools, how to determine how high price will go. Right? And I already showed you actually how that works with extensions, but in this class, but we're going to do that in a little bit more in depth. Improving your buy orders, right? Improving your buy order timing, right? We're going to do some of that. I've already showed you some of those techniques in order to improve your buy orders. When to spend your winnings, right? We're going to talk about that because that's very important. Because if you do trade this, I suggest you use money you're willing to lose. Just say it's gone. It's gone to zero, and then say them and pretend that it's actually gone, even though it's making a whole bunch of money, until it's time for you to take a little bit out of at the time. Because I want you guys to grow to become millionaires, right? And this thing will happen really fast over a relatively fast period of time. Fast period of time is relative. In 10 years, 5 to 10 years, you'd be a millionaire basically if you start even with $400, right? But you have to be willing to not take out too much money out of when you see this thing starting to grow quickly. When you see your winnings start to grow quickly, you can't be taking out everything, or else it won't grow to millions of bucks over that time period. And then we're going to also review what we learned, and I might split that into another class, maybe. I don't know if it's too much, and I think so because I've blathered on a lot for tonight. So that's about it. I hope you enjoyed the class. If you're new to this class, and you're wondering, well, I don't know if this thing really makes money. Well, let me show you. This is my chart here, right? Going back from all the way back here from September, like I was down here and slowly started moving up, and then kaboom! Look at this. Right? All this downdraft is because I started spending a little bit of it. So I'm doing extremely well with this just doing this exact same technique I showed you today. And I'm not the only one. If you think, well, I'm just a one-off kind of lucky dude, right? Ooh, look at that. Close that window. Oh, snap. I shouldn't have done that. Oh, well. We can head over to Rational Investor. Which I suggest if you want to learn how to trade all markets and do day trading, right? I suggest you take the courses that he has available here because this is a small, tiny window into trading, and you're not even trading, you're actually just investing. So if we take a look at his portfolio, right? Investor crypto portfolio. Come on. Right, because he has it posted. You can see that he started with 1.25 bitcoins, and at the time it was like $450. And he's grown it to the current value of 26.3 bitcoins, which has a value almost a $60,000 value, with a net return of 2,000% over a year and a half, 2.5 years. Unreal. So effectively, by next year, Brian will have over $1 million by next year, September, which would make him be doing it 4 years. He'd probably by September, I wouldn't doubt it if he's at $1 million, right, worth in bitcoins by next year in September. Just following the little old lady method of investing, because he hasn't taken anything out, and there's no, I don't doubt that he will get there. And if it's not next year, it'll definitely be the year after, when he gets to the 5-year range. So if you have any doubt at all, you can see the examples. And you know what? If you join his class, if you join the rational investor courses, and or just do the monthly blog, and to access the blog and the member site, the lounge, there's a lot of people there, a lot of traders like me who are willing to help you learn how to trade and talk to you about it, and they will tell you, have their experience with the little old lady style of method of investing, and they'll tell you the same thing, and how well they're doing. They're doing extremely well, and some people have come in and work. Like one person does this 8 hours a day, and he's just tearing it up, non-stop, tearing it up. And you can tear this thing up if you just on this like a monster. But it's time for me to end this video. Thank you for watching. I appreciate you guys watching my video. I hopefully you guys leave some comments and some suggestions and way to improve this. Yes, my camera still got the shadow there. Thank you for noticing if you did. The only reason why I haven't brought another camera is because I'm in Chile. And when I went to the store to buy the camera, they said they're sold out, and they're sold out everywhere with the good cameras. I don't want to buy a cheapy camera. They have cheapy ones, but I wanted to get a good one, and all the good ones are gone. So I have to wait until one of the computer stores has stock on a decent camera. So, well, thank you let me close that off again. Thanks again for watching, and I hope you guys enjoyed this show and class. Ciao.